Hi guys, welcome to the second part of the seventh session from FinBites, presented to you by FinWiz and sponsored by Trade Manza. Check out Trade Manza, the app, link in description. Quick disclaimer: FinWiz is not a SEBI-registered financial advisor. Whatever information is being provided here is all for the general sake of education and should not be taken as a financial advice or an investment idea at any point of time. So in this session, we're going to discuss about the importance of volume, right? So we've been talking about supports and resistances, single and multiple candlestick patterns, and we've seen the importance of supports and resistances, right? These are the price points, the price levels at which a lot of important movement in the price of a security usually happens, right? And price and volume are the basics for every single technical tool, like more or less, right? And we're going to see the importance of volume in this session. So what is volume, right? So volume is a number of times security has changed hands over a certain period. So if you're usually you usually analyze volumes as daily volumes. So if it's done for taking the period of time as a day, so the stock trading volume would be the number of shares traded between its daily open and daily close, right? And yeah, it's an important input for technical traders and especially for those who are in intraday trading, right? So every transaction that happens contributes to the volume of a security. What do you mean by transaction? A buyer buying and a seller selling, right? So if I have got, let's say, 5 transactions happening in a day, the volume for that day is set at 5. If I've got 3 buyers and 5 sellers, the number of transactions would be 3, right? So that would be the volume for that day would be set at 3, right? And the volume tells investors about the market's activity and liquidity. So if there's higher volumes happening, the script is much more liquid, correct? And it's probably also much more volatile. If that happens, then there's smoother order execution, more active market, like for that particular script, right? Also, more opportunities for you to make money. So if you remember watching Scam 1992, Bhushan tells to Harshad, to always go and trade in the center of the ring and not go with penny stocks outside, right, in the corners. The reason for that was because of volumes, right? It's much more active there, right, in the center of the ring. The penny stocks were just illiquid in nature. So why is volume important? So traders use technical analysis to, make decisions whether or not you want to buy or sell a stock right now. And for doing that, you're looking for good entries and good exits, right? And at price points of supports and resistances, the volumes become important because they provide you clues whether or not the entry or exit at that point can be a good one. Yeah, so I'll explain this in a much more better way through charts. So volume is an important indicator because it's used to measure the significance of the market move. If the market move is, is in a certain direction, but the volumes aren't there, you probably know that it's not a significant one, and that the move will be consolidated some or the other time later on, right? So yeah. So if the market is moving by a big amount, let's say, right, for a given duration, then the strength of the movement, like it'll gain credibility or lose its credibility based on the volume on that specific period, right? If the volumes are good, then you're pretty sure that the movement is strong. If it's not, then you're skeptical about it. So if it's a higher volume, yeah, the move will be much more significant, right? And alternatively, if the volume is low, then the move is considered not so significant after all. So this is how breakouts are usually happening, right? So you would want to enter somewhere here, right? How do you know this is the correct entry price and not this or not this, right? So you use volumes for that. So it's just a screenshot of a auto home candlestick chart, right? It's going showing you higher volumes to break out. I'll just move to some more charts and see if I can show you good volumes or good breakout somewhere. All right, so I've opened the chart for Oro Pharma on TradingView, right? So this is the TradingView chart on guide, and I've set the time frame for 15 minutes. So every candle is 15 minutes. What does that mean? So for this candle, let's say you can see the volumes written up here, right? So for the specific candle, it's 53,000 order, 53K, yeah, 53,000 orders for the 15-minute starting 1:30, right, or 1:15, right? So yeah, and now we'll try to spot some breakouts if we can. So I see a resistance here and a breakout happening, correct? So you see the price getting rejected at multiple levels, and then there's a breakout coming and then a pullback, after which there's the rally, right? So this is how it happens most of the time. Yeah, it breaks out with a really nice volume. Look at this volume; it's really nice. And then, so you need to know that, because there's a resistance. There are people here who were short, and if you were long enough, you won the basically won the battle against the shorters, right? The people who were shorting. And these, why is this pullback happening? So this is just, all the people who were short here, they all had the stop losses over here, and the prices, when the prices hit these levels, they started selling, and the fell down temporarily, and then it went back up, it shot back up. So that's how breakouts usually work. Let's try to spot some other another breakout trade if we can. So yeah, here's another one. So you see this level acting as a support, right? So you see price going up, and then when there's a rejection, when there's a breakout happening, you see the candle's volume is immense, right? It's intense. And it usually happens like a lot of times. This is how you can avoid a false breakout, right? So if you were here, do you go short or do you not? So that's decided by the volume, right? It could be the case where it could breach this level and then go back up, right? But that would mean that the breakout is false. Like, you call it a fake breakout, right? So yeah, that's well, let's try one more. Okay, the same level. This is a common thing among technical analysis. Supports and resistances exchanging their roles, right? So you see this is a resistance here. You see a lot of price rejection happening at this level. The breakdown happened. You see a big candle right on the breakout, and then you see a pullback, a tiny red candle, if I'm not wrong. Yeah, you see a pullback happening as well, right? This could probably be better viewed in 5 minutes time frame. We'll go there later. So yeah, the breakout happened, and then there's a pullback that happened after that, right? And the stock rallied, and then that resistance became the support later on. And this is a very common thing happening when resistance and supports are breached. They, just reverse their roles per se. Let's try to spot this pullback in a smaller time frame if we can. This is 24th November 13:15. We'll go there. So just a second. So yeah, that's resistance right there, right? You can see that rejection happening multiple times, right? And then the breakout happens. So that's the breakout, and that's the intense volume. You can see the volumes are at 323,000 compared to 6,000 or 11,000 somewhere here, right? And you see all these price rejections, like all the red candles right here. So as soon as the breakout happens, right, after this breakout happens, the price usually falls back a little, right? It doesn't straight away go. It falls back a little. That's called a pullback. And after that has happened, that is when the actual rally begins, which you would want to ride theoretically, right? So yeah, uh, I hope this video was useful for you guys. I'll see you guys in the next video.